What's going on, everybody? It's Stas here. Welcome back to another video. So like you guys saw in the title, in this video, we have to go over the 7 most beaten down stocks that I'm looking at right now in the stock market. And no, we aren't going to talk about crappy, worthless stocks like Workhorse, Nikola, and a bunch of other ones. We're going to talk about legitimate companies that are down a ton. And before we even do, make sure to get your free money from Moomoo. You get 1 free share of NEO and 5 other stocks up to $3,500 each. That's linked down below. Just use that link, deposit at least $100, and boom, you get some free money from Moomoo. And with that being said, let's get right into the video. So before we dive into these 7 stocks, and we'll go kind of rapid fire in this video so it's not too long of a video. Before we do that, let's take a look at what the markets are doing so far. It's currently almost noon on the East Coast. We have the NASDAQ up a whopping 2.5%. The Russell's up 0.7%. S&P's up 1.6%, as the Dow is up 1.2%. And we have the VIX hovering right above 30, down 3% on the day. Gold's down 2%. Silver's down a little bit over 1%. So volatility's down. The metals are down. Oil is down, and we have equities, and let's actually pull up oil very quickly. Crude oil right now is hovering right above 94 a barrel. It's down about 8% on the day. So we have oil down, gold is down, silver's down, VIX is down, equities are up. So we are having a pretty solid day so far, and I will break this down more in my video later on today. But overall, you guys might guess this, I'm still a bit skeptical. I don't think this is the huge rally we've all been waiting for, that we're going to just see a reversal right now. I mean, sure, we could, but the signs show, or rather the technicals point to the bear still being in control. And that's just the reality of the matter here based on SPY and Triple Q on this 20-day chart. Both of these are trading right under the main 180 moving average on the 20-day chart, and they're under the overall downtrend still. So again, we'll talk more about the markets in general in my video later on today, so make sure you guys subscribe. And while you're at it, you might as well hit that like button, right? And now let's talk about some stocks, which again, these stocks are not worthless garbage stocks like Workhorse, Nikola, and a bunch of other ones that we're not going to name in this video. These are legitimate stocks, legitimate companies that I believe will be here for a while that are down a lot. The first one is Square, and we might as well bunch up the first two because they're both in the fintech space. We have Square number 1, and we have PayPal number 2. And full disclosure, I do not own Square, but I do own PayPal, and I did buy recently at about $125 a share. I haven't bought more, and now might be a good time considering we're under $100 a share. So PayPal's one I own, and again, Square I do not own. And if we take a look at these stocks, Square is down a whopping 65% from all-time highs. This was at about 100 or 200 rather, and $89 a share, and we just hit $82 a share. So if we look from top to bottom, and who knows if the bottom's in yet, but from top to bottom, it's actually down more than 70%, 72% to be exact. And we have PayPal down about, I think, 60%. Let's double check that. PayPal's actually down almost 70% like Square is. So both of these arguably got way overvalued. I don't think that's arguable at this point. They simply did as we got into the pandemic. We saw that pandemic crash, and we had the crazy recovery after. Thanks to the Fed, right? We got that crazy rally, and a lot of these stocks got way overblown. PayPal got overvalued. Square got even more overvalued than PayPal, in my opinion. And now we're getting the massive drop, the massive bear market, as we are heading now into a tightening cycle, or at least the Fed is going to try and tighten. Are they going to get to 3% rates? Are they going to get to 1%? Realize it's too difficult and start coming back down, which if they do that, inflation is going to run rampant. So it's really up to the Fed right now. We all know the Fed plays a very, very big role in everything. So now that we're getting this compression in the growth stocks and we're heading into this tightening cycle, these stocks have gotten hit very hard. Square got hit very hard, and it's still above where it was before the pandemic, which is solid. It's hovering right at about $98. We have obviously PayPal splitting up with eBay. There's a lot of headwinds with this company right now. What's next? Where are they going? They're kind of in a rut, I would say. And the next stock I'm looking at here is Etsy, which you guys probably know Etsy. This company is pretty fantastic. I mean, you can go on Etsy and buy whatever you want from freelancers or, small entrepreneurs or whatever. They do these DIY projects. They can make necklaces, they can make different types of jewelry, furniture, craft things out of wood. I mean, there's so much stuff on Etsy. A lot of entrepreneurs on Etsy, people with side hustles. I love that business. I think it's very strong. And the stock, even though the business has been doing well, the stock recently has not. It's down 60% from the $307 high, which was hit in the end of November. Now we're hovering at about 120. So we're down 60% today at 120 as the stock's at 120, but it was at 106 about 2.5 weeks ago. So it was down over 64% at one point. So Etsy's getting clobbered right now. It's one of those growth stocks that got way ahead of itself over the pandemic with the Fed-induced rally. Now we're getting the tightening cycle. Growth stocks have been hit. Etsy's one of them. Again, it's down 60%. And we're not going to dive into valuations in this video. That'd be fun, but that would be way too long of a video. So we're not going to say whether or not these are undervalued now or are they still overvalued. We're not going to get into that from my personal perspective, of course. I'm not a financial advisor. I'm not telling you what to do, but we're not going to talk about that today. We're just simply going to go over the magnitude of these sell-offs and kind of why it's happening, which again, I mentioned the Fed, growth stocks have been hit. We're getting into a rate hike cycle, yada, 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 yada. You guys, for the most part, probably know that. The next stock here is Netflix, NFLX, which is currently up 2% on the day. Pretty nice day for Netflix, but overall, it is down a whopping 52% from the $700 all-time high that was hit in the middle of November. So you guys know Netflix, right? They've been crushing it. Well, maybe not in the past couple of months, but back in the summer, heading into the fall, they were crushing it with content. They had, what was that one? Squid Game, which broke records. That was really the main reason, the main catalyst why Netflix stock shot up a ton to 700. And what really hit Netflix was the fact that their growth was not as great as expected. You guys remember in the last quarter, I believe their subscriber growth was not as great as expected. Guidance was not that strong. And that's when the stock really started to sell off. I mean, we were selling off aggressively heading into that report as the overall triple Q started selling off. And look at this. The big sell-off started in the middle of November. And when did triple Q start selling off? In the middle of November, pretty much. End of November. That's when it started to get toppy and it started selling off. So we started selling off on Netflix, again, middle November, and it got down to about 5:30 before that earnings report. So up until the earnings report, it was in a bear market already. It was down 25%. Then the numbers came out. The growth showed to be slowing down with subscribers and a bunch of other metrics, and that's when the stock took another 36% dive. So we lost 25%, and then we lost 36% after the report, which is insane. And at this point in time, I really do think Netflix, and again, we're not getting into the nitty-gritty valuation here, but I do think Netflix is an interesting opportunity. We had Bill Ackman. He bought a bunch. I forget when that was, a couple of weeks ago at this point. I think it was after the... Actually, it might have been right after their report. So this was about 2 months ago almost. They reported the stock tanked. Bill Ackman bought, because I remember when he bought, the stock actually pumped $100, and you guys can see it here. He bought it, or at least the news came out that he bought it, and the stock went from 360 to 460, so it rallied 30%, and now we're obviously down from 460. We just hit 330, so we're down about 30% from that pop after Bill Ackman was, buying. So Netflix is one that I'm looking at. Facebook is one that I'm also looking at, and I'm a little bit more well-versed with the Facebook numbers. Facebook's down 51%, and the reason why I'm well-versed on them is because I own the stock. I started buying it, and they ended up reporting earnings. growth was slowing down. Well, it's completely halted in terms of the, I think it was average monthly users. So they're slowing down, which was expected. I expected that. And the markets got clobbered. And on top of that, Apple changing their privacy. That's messing Facebook up right now. They're expected to lose about $10 billion in 2022 from that, and I think that's $10 billion in revenue. So after that came out, the stock got destroyed, down 25%, and now it's down even more. So this is one that I have been buying. I haven't bought any more here under 200, but I'm going to in the very short term here. And if you guys do want to be alerted when I buy, everything I do in real time, buy, sell, options, selling options, buying options, I post all of that on Patreon. Use my link down below to join that if you guys are interested. You also get Discord access and morning videos every single morning exclusive to the Patreon members. So Facebook is one that I'm going to be buying more of. It's down 50%. Disney's another one that I own that I want to buy more of, and I actually did buy more recently of Disney. This one's up 3% on the day, but overall it is down 35% from that $200 all-time high, which was hit. Let's see here. That was hit 203 back in the beginning of March of last year. So a year ago, Disney was at all-time highs, and in the past year, it's down 35%. So I believe this is going to be a great turnaround story as we kind of put the pandemic behind us. And the truth is, inflation, Disney's passing it on to the customer. We all know the Disney park experience. Those prices have been going up. So they're not eating inflation. They're passing it on to the customer. And let's be honest, people are willing to spend 5-10% more in terms of these park tickets. They're going to go to Disney no matter what. They're going to continue watching Disney movies no matter what. People's kids are still going to be raised watching Disney. So for me, this is a no-brainer. It's down 35%. I have a 5, 10 plus year, 15 plus year time horizon with Disney stock, and I don't think this company is going anywhere in that time period. So I'm buying this up. It's in a bear market, and again, I think parks, the cruises, they're going to crush it as we're getting out of COVID. And I've had a lot of people close to me, that have gone to Disney. Everyone's saying it's packed. I've heard a lot of people saying it's packed. A lot of people are still going. So Disney is a great one. I'm buying it. Full disclosure, I own it and I'm buying it. And Starbucks is one that I mentioned briefly yesterday. It's down 35% from all-time highs. It's not quite yet in my buying range, but it's almost there. If Starbucks falls another 5-10% from where it is now, maybe it gets to 65 a share, 70, 75 a share, I'm going to be initiating a position. I believe their dividend right now is 2.5%. Pretty solid. The PE ratio is getting there. It's still a little bit hot. The PE right now is sitting at a 21, roughly 22. If it got into the teens, I will be buying more Starbucks. So again, guys, these are quality companies. I personally don't expect these to go anywhere in the next 5-10 years, or else I wouldn't be mentioning them in this video, right? Sure, we do talk about stocks sometimes that might be bankrupt next year, but I'm very confident these will not be bankrupt next year. I could be wrong. Anything could happen, but I'm confident. And these big, massive drawdowns, some worse than others, I think they could be buying opportunities. So that's it for this video. I'm going to wrap it up. Make sure to hit the like button, subscribe, join my Patreon. Again, if you want all my moves in the markets, that's linked down below. And don't forget to get your free money from Moomoo. You get 1 free share of NEO guaranteed and 5 stocks, up to 5 stocks, additional stocks, each of which could be valued up to $3,500. Use my link down below, deposit at least $100 with Moomoo, and that's how you get your free stocks. I'll catch you all in the next video. Thanks for watching. As always, peace out.